Welcome back. Happy Friday.
Happy Friday, Andy.
September 5th. It's Friday. Made it through the week. Long week this week. It was a fun one, though.
It was busy, but it was good busy. You know,
did we get some news today in the market?
Yeah.
Like,
did we get
something happened? Because I just woke up and then market was like it was going up and then now it's down.
Okay, well, we got some some payroll numbers that came out from the macro side of things. Those got adjusted down. Unemployment is up. We are now firmly pricing in 2 rate cuts. September is essentially a sure thing. We could check the prediction markets, but they're going to tell us that we are going to cut rates, probably 25 basis points, but there is a chance now, I think, of 50 basis point cut in September. That'll happen in a couple of weeks. They're also starting to price in another cut by the end of the year. I think more importantly, though, Sol Strategies got approved for a NASDAQ listing. And that comes after the NASDAQ was vocally clear that they were going to scrutinize these crypto companies that really their only purpose is to buy and hoard crypto. They were going to be extra tough on the listing requirements for these companies. Well, Sol Strategy is the first Solana treasury company that was approved for the NASDAQ.
Interesting. Okay. All right. So, and I saw today actually that 𝘗𝘯𝘓𝗧𝗧𝗧𝗧 is going to look to be the chairman of a $1 billion Solana. That is Solana Strategies?
Yes. Okay. Yeah, it looks like Mr. 𝗗𝘯𝘓𝗧𝗧𝗧𝗧 will be I believe they call it the advisor, the equivalent of Tom Lee and 𝗵𝘬𝘗𝘓𝗧.
So today's market was like not bad news is good news for rate cuts. It was actually just like, okay, bad news is bad news type vibe.
It was reaction to the macroeconomic environment being a little bit more precarious than
like recession type of vibes.
Thought. Recession vibes, but the thing about it is that, you know, when the economy issues one of these, like, you know, poor drivers, it looks a little bit weaker than we would have thought. It's like, okay, well, the immediate reaction is down. Oh, the economy isn't as strong as we previously thought. But then the reaction to it is that now they're going to come in and they're going to do some sort of easing, some sort of loosening or dovish economic policy. And so then it recovers upwards, right? So, I mean, if the economy isn't as strong as we previously thought, like, who really cares? It means that they're just going to adjust and make it looser anyway.
Interesting. Yeah, I mean, sounds like it's really hard to get a job.
Unemployment was 4.3% in overall. What I found interesting was that U.S. unemployment rate for ages 16 to 24, you know, you and I are both just out of that range.
Yeah.
But in that range, 10.5%.
10.5% unemployment
for ages 16 to 24. That's male and female. I don't know about you, but I had a job pretty much the whole time I was in that range until we.
Yeah, I was in and out of jobs, as you know. It was yeah. I mean, I just think it's harder now to get a job. I mean, I saw this guy put out a tweet, the Roy guy from 𝘗𝘓𝘬. He was like, you know, there's hyper competent people that are coming out of university, top 0.1%, 0.01%, and the rest are just hyper incompetent and like struggling to get jobs and stuff like that.
Yep.
So
that's pretty accurate. I also think more people are choosing not to go to school, especially if you're a competent person, but maybe, you know, you would have to take loans if you're not in a financially privileged situation. It just makes so much more sense to go into the business world, leverage AI tools, and progress your place in society as a result of using the technology at your fingertips, more so than the social capital that you may build in college.
Yeah. Alrighty, guys. Well, we got a fun stream today. We got Eric Chen and Stephen McClure coming up. Unfortunately, we had Vance had to deal with some personal matters, so we're gonna have to reschedule Vance from Framework for a later day. That's all good. We will get him back on at a certain point. Honestly, it'll be more fun if the market's even higher, which I think we're probably going to be moving higher as long as Bitcoin continues to hold the line. Coming up, like I said, we've got Eric Chen, CEO of Injective, Stephen McClure, CEO of Canary. We're going to be talking a lot about the institutionalization of the asset class. which we know and love, which is crypto. I believe they're in the background. I believe that they're ready. This is the first time having the Steven on, as well as I think we've had Eric on once back in the early days of the Injective time. So we're going to get them up, guys, on stage. We're going to talk ETFs. We're going to talk institutionalization of crypto, kind of get their input as to what they're seeing, what Eric's building up with Injective, and more. Happy Friday, guys. And Steven, Eric, welcome to the show. It's good to have you guys on.
Thanks for having us.
Happy Friday.
Absolutely.
Happy Friday.
Guys, congrats on all the good work and the first U.S. state ETF and filing that with the SEC. This is something that I think we're going to see a lot more of, and you guys were pioneers in this place. So congrats on that. What was the experience like kind of working on this project that's a little bit less familiar of a structure than maybe some of these other treasury companies and other ETFs are working on?
Yeah, well, maybe I'll start off by talking about the ETFs and then hand it over to Eric to talk more about the treasury companies. But I've been involved in ETFs since really around 2009. I was an institutional money manager, mostly managing insurance companies and sovereign wealth funds and pension funds and the like, and hedge funds. And the firm that I was with at the time decided that we were going to buy an ETF company. So we went out and bought a Ridex and Claymore, put them together, and I became the portfolio manager for all of that, and decided we would launch our own flavors of things. So I'm actually used to attempting to launch and launching very esoteric style offerings in the ETF world, even in traditional finance. So launched the first asset-backed security ETF, did the very first Build America bond, if you remember that. And of course launched other products around that. So some of those took a long time. It just takes a lot of patience and grit, and some of them are easier. So when the last firm I started, which was Valkyrie, we filed for the some of the first Bitcoin related ETFs. We launched the first Bitcoin futures on NASDAQ, Bitcoin mining companies, and then of course we were one of the many of Bitcoin Spot. And we're always looking for unique angles that the market might be interested in, might be looking for, that doesn't exist, and that's really where we're focused. So, for instance, when all the ETH ETFs began to launch, we just didn't think it was going to be that compelling unless you had staking involved. So we decided to bow out, let BlackRock take all the gains. And then, of course, when we started Canary, we took a big risk. We didn't know who the president was going to be, what type of administration we were going to have, what the SEC was going to be like. But we decided that we were going to plow forward anyway. So we filed a bunch of the early altcoin ETFs last year. One of them, of course, being staking. So we try to incorporate staking in every ETF that we file that allows staking. We think it's a very important feature of the network. We think it's a very important feature of the coin itself. And of course, it's an extremely important feature for investors that want access.
Yeah, most definitely. I mean, I think that I'd like to get into some of the nuances of how you guys are thinking about liquid staking versus, validator withdrawal queues, these types of things. But Eric, just want to give you a chance to kind of put this from the builder perspective, right? Launching an ETF, trying to, get these things, filing an ETF, trying to get these things moving to open up the type of capital allocators which can allocate towards something like Injective or the INJ token. From your perspective, kind of similar train of thought, how are you thinking about the ETFs for token projects, staking, etc.? What is your frame of reference for launching these types of things?
I think for us, there's really two ways to think about it. One is, more on the technical aspect of things, where we had to do a lot of work to support these type of product and making it much more, institution forward and friendlier for a lot of these platforms and issuers and institutions to be able to hold and be able to mobilize decentralized stake tokens. So one really interesting part is we decided to create like a specific feature slash module in anticipation for the ETF, and also for the most recent DAT dedicated towards INJ, which allows for the transfer of staked INJ positions between addresses, so that different types of escrows can be moved amongst them freely, and it also allows for kind of like the skipping over of onboarding period for the list of like different types of like staked INJ amongst various whitelisted permission addresses. And so that's really cool feature that we did to like support kind of like all these features in anticipation for the institutional adoption. And I think as an ecosystem and as a blockchain, especially in this extremely innovation forward type of administration and this political landscape, we've just been doing our best to be able to support, to be able to push forward with a lot of these very innovative products like the staked ETF, and on top of that the DAT that's recently launched as well. Overall, it's just extremely exciting time for us, and we've just been keeping our eyes peeled with the overall progress for the commentary period for the INJ stake ETF, as well as like the announcement from the Pineapple Financial.
Yeah, it's pretty interesting times in the world of financial engineering. And Stephen, I must say, in response to what Eric has kind of laid out with regards to these treasury companies, I think a lot of people in the space were surprised at the way in which that this kind of market cycle, if you will, has played out. You mentioned that when the Ethereum ETFs came out, you thought there'd be little demand for those outside of just, without staking, let's just say. And, I think a lot of us thought that a lot of the demand for the market to move this cycle, let's call it 2 years ago, was going to just come through these ETFs, was going to come through these 401ks. Really, I mean, what Eric and a lot of others have realized is that a lot of the demand is actually coming through these more treasury type vehicles. You guys at Canary have, I mean, I don't know exactly how many, but probably upwards of a couple dozen ETFs filed for various assets. And I think a lot of us in the market are kind of waiting on the floodgates to open, right? A lot of us haven't really been able to participate in DATs. Also, they've only really affected the top couple assets in a meaningful way, at least up to this point. What I'm getting at here is I think a lot of the community is curious from your perspective what the actual state of these ETFs are. The injective ETF, the staked ETFs, the Pengu ETFs, the Litecoin, Dogecoin, et cetera. I know that you guys have filed a ton of them. What is the state of these? What is it going to take to actually get these through? And would love to just understand if you had an estimated timeline as well, or any predictions and thoughts there.
Yeah, look, I'll give a guesstimate because the reality is I know nothing.
Okay.
But the bigger reality is I know some things. And what we do know is that the exchanges have filed for generic listing standards with the SEC. That is going through a public comment period. They're going through revisions as we speak. And there is an expectation in the market. This isn't for certain, that those generic listing standards should get approved sometime by the end of this month. And then the SEC will work on ways to actually open up for tokens that qualify under the generic listing standards to be launched in an ETF. So my expectation is probably sometime in October is the right date for anything that has a current U.S. futures market. So that's the first stage of these generic listing standards. There were conversations earlier for other qualifications that were more quantitative, such as market cap and trading volume in the U.S. And it seems like that has been put on hold for now, but there is an expectation that those more quantitative measures will probably come out, 3 to 4 months after the first round of generics come out. So look, if you just look at CME, Coinbase, those are probably the two biggest markets for futures for crypto. Anything that's had a futures market for over 6 months would qualify once those get approved. So again, my expectation is sometime in October, maybe pushing into November, and then next year, probably in the spring, is when we get the new standards, which would include a lot of the other things that we're working on.
Very cool.
That is an accelerated timeline.
Exactly. Well, in my opinion, I mean, I'll just say this: there's a few things that probably should have been approved a little earlier. But it is what it is when you're working with the government.
Yeah, we've seen that. I have a question kind of for both you guys, but I'm sure you have some unique perspectives on it. In staking in general, we had a live stream actually at Permissionless in New York. We had asked a couple of really smart guys, 𝘗𝘳𝗓𝗏 from Robot Ventures. He sort of explained, look, we're seeing staking yields go down across the board. He said he was bearish on businesses that were built around staking revenue, LSTs, protocol validators, but very bullish on businesses bringing stablecoin demand and companies on chain. But the staking yields were coming down quite a bit. And then his buddy over at Dragonfly, 𝘗𝘓𝘓, agreed. He said, we're going to go downhill from here. Staking mania was a bit of an illusion. And the idea that you're paying for security is kind of a meme. And so he also agreed that these staking yields were going to come down. But he followed that up by saying, look, with these digital asset treasury companies, that was sort of false. And in fact, these companies are making quite a bit and increasing their MNAV as a result of staking yields. And so I'm curious, Stephen, from your perspective with respect to these ETFs and particularly these staking ETFs, and then Eric, just generally the builder's perspective on the chain, where do you guys see staking yields? Are they trending down, or is there enough demand from these treasury companies and these ETFs to really keep these staking yields alive?
Go ahead, Eric.
Yeah, so I think one of the most interesting part about a lot of these like LSD type of protocols and LSD product is that they're typically extremely utility focused. They serve a very a precise and interesting value proposition for a user, and it's typically like it's a smart contract that's typically open source, etc. So it makes it so that like it becomes a very, very competitive field because there's no specific differentiation between different types of LSD protocols. So it could be like a kind of like race to the bottom. There's not necessarily like a mode or network effect between a lot of these kind of like staking protocols that are happening on chain. And if a user wants to migrate, it's honestly maybe a waiting period at most, but it's honestly just a transaction away. This is very different in terms of what the ETF space is trying to offer and what a DAT space is trying to offer. Because first of all, it has a very distinct advantage of kind of like this differential capital flow between the institutional capital flow, wrapping it under like a compliant and regulated product to interface with the general public, the general like investor crowd within like a traditional financial rail that they're used to. And this creates a completely different kind of process and access, which gives it a significant advantage and obviously like value proposition that can't really be easily beaten by just another like commoditized protocol. And I think that's really like the differentiation here is that like staking yield is probably going to collapse and the fee for it is probably going to kind of like compress over time. But that as a product that's being commoditized versus an institutional product that's being where there's a lot of effort going into packaging it into a compliant kind of like structured product or compliant like offering to be interfacing with like a massive set of traditional investors. That's a completely different type of product we're seeing. It's the expanding access. It's the grow the influence of or like grow the kind of like the beauty of crypto to a bigger investor base.
Mm-hmm. So from that lens, then there are still these structured products or these kind of financial rails that provide yield on a token like Injective, which are interesting to a subset of investors. You're saying that basically this concept is still somewhat new enough or interesting enough from their perspective to want to allocate to these types of investments then?
Yeah, exactly. I think, and I think that's why it's so very, very exciting. Because at the end of the day, like it's almost like saying like bridge protocols can be commoditized, which is certainly not the truth. Bridge protocols have like a very, very strong moat. It has basically like a network effect as it congregates more like a usage and flow and like like a TVL. And basically, a lot of these products are like the bridge protocol, where they bridge between the Web3 slash like DeFi world with the TradFi world. And obviously, as it expands in size, the moat just becomes stronger and stronger and stronger, and therefore it becomes a very powerful and very long lasting moat.
Stephen, do you agree, disagree with some points? What are you seeing on the staking demand slash yield side of things?
Yeah, look, I think there's a ton of demand for the staking, and I actually find it quite interesting. My previous background was more in fixed income, so I completely understand that a staking yield is indeed in some ways income that you get for holding onto an asset, and that's something you don't get with everything, right? So you don't get that with fine art unless, of course, you lend it out. You don't get that with a lot of things unless you lend it out. But for equities that have a dividend or fixed income or a protocol that you actually earn the yield for the transactions that occur on the protocol, those are all very interesting, and people love yield, right? So when you have, for instance, the difference between an ETF and a DAT is, in a DAT you're investing in the business of the yield, right? So in an ETF you're investing in the yield itself, and you do have two different types of investors investing each one. ETFs are mainly, it's a big financial advisor type instrument because it's pure, it's clean. A financial advisor might put their clients in a portfolio of 90% ETFs with maybe some mutual funds or direct stocks or even a direct fixed income. Whereas a DAT is going to be probably a lot more retail, a lot more fast money or hedge funds. And then, of course, institutions are going to be split between the two. They may not have it in their mandate to own an ETF, but they might have it in their mandate to own a corporation that has a treasury. So, or vice versa. So you really are looking at very little overlap in the investor, but you're also investing in two different structures. And I like both structures. They both accomplish a different goal, right? I kind of mentioned already with ETFs, it's going to be you buy it, you have direct access to underlying. It's probably a little bit less expensive, and then you get a yield out of it. The DAT is going to be a lot more speculation on not just the token itself or the yield itself, but also the discounts and the premiums. So right now, most of the DATs are trading at premiums. I do believe they're a point to where they'll trade at discounts, and they'll keep going back and forth. It's just the nature of capital markets. So whether it's a closed-end fund or an equity, I mean, there's a lot of companies out there that trade it below their book value. And right now, DATs are trading above their book value based on the understanding that they'll likely utilize that book to issue more shares to buy more of that book, right? So that is really the play right now. So it is a very different instrument that does different things. And if you look at something like MicroStrategy, it's very possible that it's included in the S&P where an ETF cannot. So that makes it a really interesting play when you start including these treasury companies there.
What do you think are the knock-on effects of MicroStrategy getting added to the S&P?
Well, I'm probably the biggest doubter out there, that's in crypto that'll actually get added. And one of the reasons why is because its operating business is now such a small part of just the overall income of the company, and a large portion of that is Bitcoin. Whereas on a DAT like for like Injective, for instance, you actually have an operating company that operates validators that does active things, with its treasury to create value and to create income. So in and of itself, it is an operating company. It's a tech company. So that's what I like about something like that. I think that's probably a little bit more of a fit for an index like the S&P if some of these get a little larger. But look, the knock-on effect is this: if MicroStrategy is included or any other DAT is included, then you're getting indirect access to cryptocurrencies via S&P index, which I think is really, really interesting. That's never happened before.
It certainly hasn't, and I think that the next order becomes these ETFs. If we follow your timeline that you've guesstimated for us, by the end of the year, we could have mom and pops buying cryptocurrency ETFs in their favorite, and I think this opens up a whole new horizon. And Eric, I think just as well as us, there's only so many injective ninjas out there, or warriors, or whatever you guys call them. There's only so many folk in crypto Twitter left. There's only so much liquidity that we've kind of got here in our little bubble, and I think the next step is really getting that next phase. I think there's a acronym called HENRYs. It's like something not rich yet, but it's like these
high earning, not rich yet.
There you go. That is kind of like the next big target, I think, for a company like Injective. So question for you becomes, let's say we follow Steven's timeline, we get a staked Injective ETF, we get an Injective ETF. Obviously, you've got the $100 million pineapple DAT for INJ. But I'm curious, from your strategy perspective of expanding, distribution of the token, how does your strategy as a protocol CEO change once an ETF is live, right? There's this massively new market of available buyers who may listen to a finance podcast or may subscribe to a newsletter in this category, or they might go to those meetups. From a marketing, from a strategy perspective, how do you envision Injective kind of getting into those HENRYs?
I think overall, first of all, it's just about having an amazing team and just do what we do best. Keep doing our job and building and expanding out the protocol, and kind of approaching and growing the DApp base to be much more general facing, to be a lot more consumer friendly, to onboard a lot more users that are not necessarily completely crypto native. And that's the work that we've always been trying to do to create the best possible financial infrastructure for that. And then on top of that, it just means that our work gets more intense and harder to try to advertise, to try to put ourselves in front of a much broader user base, much broader audience, and making sure that we're being considerate, and we're trying to make sure we're getting enough face time in front of different types of channels and different types of avenues. So overall, it's just about more work for our engineering side and more work for our BD and marketing side.
Yeah, Eric. So if I may, man, then in that case, right? I mean, in our show, we're taking it more into this institutional realm, getting this type of audience, trying to grow that, and trying to provide that kind of bridge, as you say, in a different way, right? You're talking a lot about bridging in a financial way. We're talking about bridging in an educational way. But when it comes to your pitch to institutions or to HENRYs, if I may, entertain us here with, what is the Injective pitch to institutions? What is the institutional appeal for Injective, and what is the appeal to these HENRYs for why they may want to consider investing in Injective?
Oftentimes we like to let the product kind of speak for themselves. But typically, if this is a institution that doesn't necessarily have a lot of knowledge or experience about DeFi or about crypto in general, which has been predominantly the type of conversation that we have to get really, really used to these days. It's really about framing Injective as a finance forward blockchain that houses kind of the next iteration of the financial stack, being both extremely performant and at the same time extremely kind of focused on different types of financial rails, on different types of efforts, including tokenization, including different types of consumer use cases. So we are taking care of both as an enterprise use case and as a consumer use case, both at the same chain. And that's really what we're trying to pitch to different types of institutions. It's about kind of bridging both, being the nexus of financial activity for both institutions and the general everyday consumers in the same place, and doing that within a blockchain infrastructure.
I got another follow-up question on the staking side of this. My understanding was that there was no staked ETFs that were live. And so I just did a quick search, and it looks like there is a Solana ETF that also offers staking, but there's still no Ethereum ETFs that offer staking. How are you guys able to get this through, and why do you think the other ones are getting held up?
Yeah, look,
Steven's on mute, but yeah.
Well, look, the ETH ETF, a lot of the issuers have applied for staking, and it looks like it will get approved very, very soon. The Solana one is sort of tricky. The one that's out there, it's not a true ETF. It's a 40 Act that holds it holds other ETFs and other things. So it's not really direct Solana. So that one doesn't really count. But we do expect that when the generic listing standards get approved, it's going to approve staking across the board. So we do fully expect, for instance, we've got a couple of other ones on file, and one of them, will probably be the first one here in October. So we're kind of keeping our fingers crossed there, but we fully expect that next batch to include staking if staking is available, and then of course, all the subsequent ones will have staking day one.
Makes sense. Quick, another follow-up. This is aside from the ETFs. I think we're kind of flip-flopping between the ETFs and the DATs here, but I saw an absolutely ridiculous proposition of a DAT to invest in other DATs. Like, how? I mean, this just screams mania, but I'm just curious from your perspective. Like, I think you're generally bearish DATs, but just explain to everyone else like what this could possibly mean for like the MNAV of a company that is betting on these other MNAV. Like, this is just an accelerant to what these more vanilla DATs are doing?
Yeah, look, and to be clear, I actually am bearish on a lot of the DATs that are out there, but I'm bullish on the concept in general. There's a lot that have been done wrong, and there's a few that have been done right. So, for instance, there's some out there where, the managers are charging anywhere between 3 and 5 points to just basically hold a token for the company, which is not market. It's absolutely ridiculous types of fees. The ones, anything that's like more in the realm of like 1% is reasonable. There's also a lot of DATs where they rewarded people with, a lot of warrants. And I mean, there's a lot of hands in the cookie jar on a lot of these things. And I think it's all going to blow up on their face. But then of course there's some that are very clean, like the one that we worked on, Eric and I together, where it's very limiting on, giving a lot of free money away from people that are participating and high management fees. And we just basically eliminated all of that. And we're like, look, we're going to do this, what we think the market is, or what the market should be. But no, we've seen a lot of them that have just absolutely done poorly because of, they're just scraping fees, scraping money early on from investors. Whereas the ones that are thinking more long-term, I think are going to be big winners. So yeah, I mean, look, we also at Canary, we invest in a lot of DATs. We probably invest in 20% of the ones that we see, because, once we see, oh, we're paying the asset manager 5%, we're like, we're out. 3%, we're out. Oh, look at these massive warrants that we're paying, we're out.
Yeah.
But those are some of the biggest questions that we ask. And, so there are a lot of good ones out there. And I think those are going to be the ones that are very successful long-term. But you just have to avoid the bad ones, as with anything. And
to tie these things together, if we do have staking yields coming down, and we have these fees that we have, that these DATs are paying these advisors, at a certain point, we're going to find an equilibrium here where it's going to make the MNAV either positive or negative if you extrapolate this to the long run. And so what you're describing is that by keeping those fees low, even if we have some staking yields compress, there's still some clearance there where the advisor gets paid, the holders of the DAT and the ETF, they still get their room, and they can get their yield, and the operating company can remain profitable even as they're operating and they're running these validators and they're collecting this yield. And that is what you're saying makes a good DAT different from a bad one.
Yeah, that's exactly right. So look, I look at the treasury as the treasury. It'll fluctuate in value. You just have to you just have to understand that. It's no different than in my past when I invested in emerging market bonds, right? So there might be a company in Brazil that its balance sheet is Brazilian real, and you know that it's going to fluctuate against the dollar, and you just have to understand that that's the case. But regardless of what the treasury does or the balance sheet does, there has to be income that's earned. And that income, if operating costs exceed that income, then it's a bad company. If operating costs are underneath the income, and then it's a good company. I mean, it's really basic stuff here. And a lot of these DATs out there, they might have, like an Ethereum DAT, for instance, that yields 3%, and then they're paying their manager 3%. Well, how do you cover the rest of the operating cost if that's the case? So those are some of the analytics that we're looking at when we're deciding on what to invest in and what not to. So as long as the staking yield or other types of operating activities exceed your expenses, then the company's profitable and it's going to continue to grow.
Yep.
Yeah. Yeah, go ahead, Andy.
Yeah, just one thing that you said prior was about the nature of some of these companies. And so I'm curious, when you guys went to build Injective's DAT out, right? One of the things that you mentioned about strategy was that it's basically its entire operating business is more or less just accumulating Bitcoin now and issuing debt. And a lot of these other DATs, that the businesses which they were prior, things from like whiskey businesses to like furniture to other kind of financial services, very kind of broad scope. How did you guys form Injective's DAT such that you guys were able to ensure that there's longevity with this while being able to, run the accumulation strategy? Because I mean, I don't mean to like send fear down our spines here, but I do feel that there may be some issues in the future where it was very clear that these companies didn't actually have an operating business, and that, whatever happened with the DAT happened, and there may be some scrutiny or pushback. How do you guys avoid that? What structure did you guys kind of follow and orient around to make sure that in the future you guys steer clear of any issues?
I think first of all, one like truly aligns with basically like what Injective is about and what like the space is about. And luckily enough, I think Pineapple Financial is a mortgage underwriting business which has a very, very successful presence within Canada. And also coincidentally, it's also one of the largest underwriters, which could have a lot of synergistic nature of it with the overall blockchain ecosystem. And this is, I feel like one of the most important things that was like oftentimes missed by a lot of the DATs out there.
Yeah.
And then second of all, it's about having like a good management team, a management team that's like there to ensure the longevity of both the ongoing business and also for the overall like DAT strategy. And it's about being long-term aligned. It's about having a very much a long-term minded incentive structures. It's about basically structuring it in a way where like not short-term minded, where it's not a one-time payment and then they're free to do whatever they want. So I think all these like factors come in together to make sure that first of all, like this whole offering is extremely clean. It's non-extractive. It's long-term minded. It's about having the best possible like treasury representation of both the INJ ecosystem and be the best representation of like their ongoing businesses. And yeah, like we're very, very excited about like Pineapple Financial obviously, and how they kind of like took like a leap of faith and like believe in us as well. And we are obviously like very, very picky when it comes to standing behind like a certain firm that's decided to adopt this strategy. So we've done a lot of like research and background, and we just think that they are probably like one of the most promising firms out there that are looking to adopt stat.
Yeah, I appreciate the candid answer, Eric, because I know it's kind of a pointed question, and I do think there will be in the next 18 months we will see scrutiny amongst some DATs. Steve, I don't know if you had anything to add there. Again, I know it's a touchy subject.
Yeah, look, I mean, it's not touchy at all. You know, I think it's going to be even sooner than that because I mean, we've seen so many deals where, again, you know, and I hate to like just kind of, you know, blast all the other deals out there, but you know, but there are some where it's like this operating, you know, I saw one where it's like the operating company has about $500,000 left on its balance sheet. It's burning $2 million a month. And they're like, yeah, we need a DAT. We need a DAT. And it's like, you know, crypto bros, bail us out. You know, we're about to go bankrupt. That's really how it feels. And you could tell, like, you know, right off the bat. So, I mean, first thing we look at is the P&L, and it looks like it's a company that's just going, you know, just straight down in flames. You know, it's time to back off, because usually what that means is, let's say you raise $100 million treasury, they're going to take 10% of that just to bail themselves out and try to, you know, keep running the operating company underneath. And that's not a good situation at all. You want most of that treasury staying in the treasury. And,
yeah, of course.
I mean, that's the whole purpose of this thing, right? So, but yeah, no, I mean, I think there's going to be a lot more scrutiny in the coming months. Not even a year out, but
yeah,
even by the end of the year. And I think some investors are going to look at deals that they're in and realize that it was a bit of a stinker, and try to, you know, try to get out or take other action. So, you know, that's one of the most important things of, you know, when you're dealing with a public company is, I mean, you've got to, you really have to operate it well, because all eyes on you and you're all of a sudden transparent. So, I mean, that's going to be very important to us. And that was very important to us when we were, you know, when we were getting into, you know, whether, you know, investing in some of the DATs that we're investing in, or being involved, you know, more directly in a lot of other ways. That's a very important place to be in.
Yeah. Steven, last question for you. Just a couple hours ago, the NASDAQ approved SOL Strategies to get listed. They had previously said that they were going to start to scrutinize these DATs a little bit closer and make sure that they had you know, a lot more legitimacy around them. But then they come out, you know, and they approve the SOL Strategies one. Just want to get your reaction to that approval.
Yeah, I actually just saw that coming across the ticker as well. So first of all, big congratulations to my old friend and former colleague 𝘠𝘠𝘺, who's the CEO over there. We've been friends for a long time and built companies together. So you know, big congratulations. And I think that's warranted too, because, you know, SOL Strategies was the first SOL DAT up in, you know, and they were up in Canada, and they were really the first ones to take that risk on SOL. And again, part of their business is running a Solana validator. I mean, that's the business of the company. They're running a validator, so it's not just their own SOL that they're staking. They're staking other people's as well, and they have a quite a large community that they're staking. So so that's a tremendous business. You know, it's not just, you know, 7% of their treasury. It's way more than that. So to move that over to NASDAQ, I think is a really big accomplishment, and I believe that they'll be extremely profitable through their validator activities.
Amazing. Eric, also just want to give you a chance to sign off, man. Where can our community find you? How can we get involved?
Yeah, absolutely. So follow at Injective, or follow me at Eric Injective. And honestly, I think the best starting point for the overall Injective ecosystem is honestly injective.com. We spent a lot of time revamping and making sure all the information is there. And yeah, like definitely, you know, stay tuned. I think we have a lot of very exciting stuff coming up, especially with EVM mainnet, et cetera. We already had to deal with a lot of, you know, activities that are coming in from the test net, even though it's supposed to be a very, very short testing period. So that's been, you know, what we've been very, very excited and busy with.
Yeah. Yeah, awesome, man. And wish you the best of luck through Steven's firm with 𝘗𝘓𝘕. Again, I mean, Steven's timeline was the highlight of my questions today. If this plays out, this will be happening sooner than expected. We could see 20 to 50 crypto ETFs pass this year. One of them being Injective, hopefully a staked Injective ETF as well, Eric. Also, Eric, I just applaud you on your journey, man. I also dropped out of university fully, 6 years ago, and just have been bootstrapping businesses online, and kind of Rob and I have grown this one together. And yeah, going from dropout to millionaire, to ETFs, to crypto, to institutions, to growing up in different things, and just kind of having your own journey is it takes a lot of grit, and also just willingness to be embarrassed. So I know what it's like to just kind of be like, take the other path, and hope you're glad that you did. Steven, appreciate your time as well. Would love to have you guys both on in the future again, talk more, and kind of see where we're at in a couple months.
Thanks for having us.
Thanks very much.
Alrighty.
See you next time, guys.
See you next time, gents. Alrighty, Rob. That was the first session of the day. A little ETF action coming in for the boys, aren't we? Injective ETF, staked INJ. Man, what else do we have coming?
I think it's pretty interesting. Just I didn't really have a question teed up, but something Steven said on the micro strategy getting added to the S&P kind of made me think. And if we kind of play that out, what that could look like is, obviously 𝘗𝘪 knows what's at stake here, and he would fight tooth and nail to get added to the S&P. That's a landmark achievement,
of course.
And so if he's coming to a similar conclusion, and these are both smart guys, 𝘗𝘪's smart, Steven's smart, and 𝘗𝘪 probably knows that MicroStrategy has a limited operating business. Right. And most of their business is in Bitcoin. And if I'm 𝘗𝘪, what that tells me is I need to beef up my operating business. And they're not a furniture he's running a Bitcoin business now. And so we applaud Sol Strategies for running Sol validators. What that means for 𝘗𝘪 and MicroStrategy means that they probably go and deploy a lot of their Bitcoin, and they put it into Bitcoin DeFi. Maybe that occurs on a different chain. Maybe they do a Bitcoin-backed stablecoin, or they do a Bitcoin lending market, and they start to engage in more productivity and monetization around their Bitcoin holdings to beefing up that operating business so that they are eligible for the S&P. And I think this creates, and so that, who knows how long that'll take to play out, but I think this creates an incentive alignment that we haven't previously seen in the Bitcoin ecosystem.
How do you mean?
Because previously it was the miners that owned most of the Bitcoin, and miners were not trying to put any Bitcoin at stake. And it was people early on that were taking the store value approach. They didn't want Bitcoin Cash to survive. They didn't want Bitcoin to be a currency. They just wanted it to be ossified, leave it how it is, and just grow it and let diminishing inflation do the trick. But we're seeing this incentive alignment such that it's pushing one of the largest Bitcoin holders in strategy to become more, to deploy more, and to be more productive with its Bitcoin. And I actually think that's going to be pretty positive for the Bitcoin ecosystem overall, because it's no longer just telling the Bitcoin ecosystem just ossify, and it's going to cause more velocity and Bitcoin velocity, market velocity, capital velocity to start spinning. And we're going to see a lot more Bitcoin moving around, which to me is the signal for a healthy market and a healthy ecosystem, healthy economy, is once you start to see the velocity of money kick up, and you start to see people doing things with their capital rather than just sitting it and letting it rot. So I think this is going to end up being quite bullish for the Bitcoin ecosystem. And I do think 𝘗𝘪 is smart enough to recognize this and do something about it. I'm particularly bullish on what this means for some of the infrastructure companies and the L2s and the lending market that are geared around Bitcoin. Remember, we did a whole Bitcoin and Beyond series. And did that not fall so, it popped off? We did that. The timing was excellent. Bitcoin L2s were all the rage, but we haven't heard anything from those guys in 3 months, right?
No, Plasma's the new Bitcoin L2.
Stablecoin L2, stable chains, right? Because stable coins took the reins. But I do think we're going to see a resurgence, not of all of those. Some of them are going to fall by the wayside. But I think the stronger ones, and it does bring up, guys like Babylon, guys like Starknet, who are starting to position more around Bitcoin Fi. I do think now, these worlds are colliding such that it's going to push entities like Strategy into the direction of deploying their Bitcoin. And if other Bitcoin treasury companies want to follow suit, that's going to be the direction for them to operate their businesses at this scale.
Money, dude. Well, look, I think that there's a chance that we are deep value in the revenue meta. And if you look at Hyperliquid and Pump.fun, what you'll notice is that we're deep value revenue meta full maxing right now. So just want to throw that out there, guys. 2 tokens on the market.
Didn't your tweet start the revenue meta?
It did. It did indeed. Stupid tweet. I was in New York at a basketball court with Jacob from Celestia. We were talking and I tweeted it.
Did Jacob from Celestia play ball?
No, we were just chilling. We just got some some food and drinks, a couple friends, I think. And anyway, yeah, we were just sitting there and we were talking about revenue and Celestia and other kind of metrics in the space. And we were like, yeah, this revenue meta is just like crazy. And then we were like, wow, revenue meta. And then I was like, I'm going to put a poll out. And then boom, the revenue meta started. Pretty wild. And now it's like a real term, but we're actually in it. Like it's fully like the tokens to own are the ones that are generating revenue and producing actual revenue. Now, with regards to the DATs and ETFs, dude, I think Steven's response to the ETF news today was super freaking bullish.
That these things are going to be approved sooner rather than later.
Yes. Incredibly bullish. Like September, October, launching before the end of the year. Are you kidding me?
That's what are the knock-on effects of that? This is basically like just another opportunity for retail and the public market.
It is just, yeah, they don't have to buy it through these treasury companies. They can just go buy straight up. Dude, what if, yeah. So like treasury companies right now, ETFs come on, more people buy the ETFs, pumps the tokens. Dude, they're going to launch the ETFs of so many shitcoins at the top. Oh my gosh.
What happened? Like ETH ETFs, Bitcoin ETFs, you know, there is several now. What was
they're just those two. I mean, BTC obviously has had massive inflows. ETH didn't really have that much inflows until the last couple months, at least comparatively. They're going to launch these things and, you know, I mean, although the thing is, a lot of these altcoins are still like really down a lot, but like launching the XRP ETF at $3.50 just feels criminal. You know, launching the SOL ETF for public use at 300 feels criminal. Oh man. Well, Rob, I mean, short stream today, man. I'm bummed that Vance couldn't come, but that's all good. We're gonna have a good next week on the stream. You know, it's been a busy week for us. We're working on a lot in the background. It's Good Friday, and you know, I'm just kind of thinking that I don't have too much else to go over, and I think we should save our energy for the rest of the day into the weekend into next week.
Yeah, I'm just looking at how historically how these ETFs, after they've launched, like what the impact on the price has been. So the SEC,
what has it been?
Well, obviously we know that, like, you know, Bitcoin is still, you know, above 100, right? Fluctuating around all-time highs. ETH, pretty much the same thing.
Yeah.
So in January of 2024, the SEC approved 11 spot Bitcoin ETFs that began trading on January 11th. Spot Bitcoin ETFs attracted massive inflows, 50 billion in the US and another 15 billion in mid-2025. Climbed from 45K to 120. I guess it's just a longer time frame. You just look at this and you see, yeah, like these ETFs went live in 2024, and then we saw a massive run up.
Yeah, we did. Well, it's just that, like, should somebody want to speculate on crypto, they can actually do it in an easy way. It's like, it's not like, go download Coinbase, wire your money to Coinbase, pray to God that it doesn't get. It's like, call your broker advisor,
have them
and tell him or her to buy you the injective ETF.
Yeah, you don't have to. You can
You
go
don't
through
even- you
your
could be on the
trusted
beach,
fiduciary.
chilling.
Yeah, you have plausible deniability for your own ego by not touching any of this yourself.
And then now you have ETF advisors being like, hey, you guys should maybe consider allocating to the crypto 50 index. Oh, what's the crypto 50 index? Oh, it's the top 50 crypto assets that have ETFs in one index.
Wow, the top 50. Take
Boom.
my money. Take my money. Where do I sign?
I mean, that's what Marcel is going to want to do.
He's gonna
be buying. He's got Marcel. Check that Phantom wallet, man. That pump.fund token's up like 30%.
There we go. The other thing that happened in these Bitcoin and these ETH ETFs when they got approved, which is not going to happen for most of these altcoins, is that the grayscale unwinding occurred. Oh, we got Marcelo behind the scenes.
It did.
Wow, 4-7.
Yes, sir. Welcome to the madness, man.
Welcome to the revenue meta.
I wanted to send you a good one. Yeah, we sent our producer like $200 of pump.fund to onboard him to crypto. And I think we're up like 20%, 260 now. Boys are up. So looking good.
Probably a good place to sign off. We've got a lot.
Yeah, Rob, we'll see you next week. We're going to go every day. So it should be a fun one. And
I hope you're ready. I hope Marcelo's ready.
All right, guys. See you soon.
All right.
Peace out. Much love.
Have a good weekend.